Hello, everyone, and welcome. My name is Barry Devine. Welcome to the Cal CPA's Tax Bill Series. Unplugged, this episode is called Cuts to the Clean Energy Tax Credits. We're going to talk about the passing of the One Big Beautiful Bill and some of the cuts to clean energy tax credits and incentives. Today, we're going to do a two-part series, given the amount of information we have in the bill related to this. So part one, we're going to talk about the calculation of the credits, the ITCs and the PTCs, and the termination on some of these programs and what was cut and what was not cut. In part two, we're going to move into what's called the monetization of these credits. And we're going to discuss the elective pay process for not-for-profits and the transferability for for-profits. So just learning objectives today, very, very quickly. We're going to talk about OBBB, MACRS, termination of programs. Then we're going to go into a little bit of the monetization process. So jumping right in, the OBBB, if you kind of break out the table of contents, a lot of what we're talking about today, the third section, solidified tax relief, that's no tax on tips and overtime, but it also has some other programs in there that were related to us and what we do. And then most of what we're talking about is under that energy independence breakout and the unleashing of American energy production. So when you look at the bill, it is a very big bill, a lot in it. But this basically, just so you know, when you kind of peel the onion back of where we're pulling a lot of this information from the bill, of course, we all know that President Trump signed it on July 4th, 2025. So here we are just a little bit later. Okay, so we're gonna jump. This is gonna be a very short and quick slide. Yes, like I showed, like we like two full departments of what we do. We're on the chopping block. So the energy efficient commercial building deductions, that was where, commercial building owners take the deduction, or not for profit or government entities allocate that deduction for meeting, ASHRAE standards, energy efficient for the commercial buildings. That goes away unless you're under construction before June 30th of 2026. So your clients are still going to have 179D opportunities within years after 2026, just because it has to begin construction by that date. Alternatively, the 45L, which is credit for home developers, you have to either sell or lease by June 30th of next year. So you will still see those going into claiming on the 2027. But those two are slated to be completely terminated. Just really quickly, a note on MACRS and 5-year MACRS. Everybody knows the cost seg bonus, 100% bonus depreciation's back. So, yay for that. We're all cheering for that. That came back. There is the cost recovery for energy property. What happened was they struck some the assets related to 48, and since 48, the only program continuing to go was the geothermal heat pumps. So they're no longer going to fall under the 5-year MACRS. And there's more to that. If anyone has questions or wants to know more of that, I have some of the code and regs that kind of show how we got to that result. But the 48 CAPE and 45Y, which energy credits, are still going to be 5-year MACRS. And then they added a new bonus depreciation for qualified production property. And this is also a fantastic thing, working on domestic content, domestic manufacturing, and like putting America first. And so this is just another mechanism in order to do that, to help our manufacturing and domestic manufacturing channel partners. So going in, okay, let's get down to the brass tacks here. What was cut and when? And everybody's saying that this administration was going to absolutely disassemble energy and the Biden era and the Inflation Reduction Act, and it's just not true. And energy is still here and it's still going. Wind and solar did get a cut, but it's going to be a little bit in the future. So it is literally business as usual for us on the energy side. So I'm going to go through these. Inflation Reduction Act, a lot of these programs. So there's letters and numbers and acronyms, and so I'll try to break it down for you. The slides have a takeaway as well. So, these are the tax provisions and the description, and then elective pay, that's your not-for-profits, transfer, that's your for-profits to sell the credit. Of course, these are some facility credits that they had in the Inflation Reduction Act. So what we decided to do was just to summarize the whole thing for you. So here's your takeaway. I'm going to just do a couple of highlights so we can keep this, this presentation short, because if you If you do peel the onion back on every one of these, this will be a 15-hour presentation. So we put the 170/90 and the 45L up. So the energy efficient commercial building deductions, the on the timeline will tell you either uh, beginning of construction or in placed in service. The BOC, beginning of construction, up top, a little legend for you. PIS is the place in service. And those are the years in which these expire. So 45 and 48, we know that those were 2 years from the Inflation Reduction Act. Then they went to tech neutral, which is the 45Y and 48E. And so you can see geothermal heat pumps goes to 2032. Solar and wind were the biggest cuts. The wind, I think, maybe was just an administration, preference for wind, and then solar. We're thinking the cut behind for solar was that it was the one of the most established industries in renewables, so maybe it didn't need the credit quite as much as the nuclear and hydrogen and these other ones. So a couple of things to point out here. We do have 45X advanced manufacturing still in play. 48D was from the chips. It's an ITC for semiconductors still in play. What got cut? 30C, those are the electric chargers, right? Electric vehicle chargers. And then so you could just go through carbon sequestration running all the way into 32. And so just another thing to note here is so solar and wind, but all other technologies under 48E and 45Y are still, so that's going to be solar and wind get cut, but like the hydropower, geothermal, battery storage, all of those technologies are still going until 2033, beginning of construction. So really good news for energy, really good news for the tax providers that help install these assets, and just pretty much good news all around for that. So coming through these, yes, there's a lot of words on these slides. Any project under the original 48, which began construction prior to 2025, same rules going forward. OBB has the 48E and 45Y. It cut the wind and solar. Any other technologies, there they are: storage, geo, biomass, hydro, any non-solar, non-wind projects are good to go with the monetization, which we'll talk about in just one hot second. I did put the rules of solar. So you have to begin construction within a year. And if you do, then you'll have 4 years. If you don't begin, you have to put it in by the end of 2027. So those are the rules. So if you're of your clients with solar and like they come to you in a year from now, you have to say, okay, when did you begin construction? Are you placed in service? Are you under 48? Are you under 48 Cap E? What are the rules? There's a lot going on if your clients have solar or wind. So you have to know that. Really quickly, these are takeaway slides as well. Credit percentages are exactly the same. Prevailing wage and apprenticeship was also unchanged. The three, if you're familiar with these energy credits, there's 3 additional 10% credits. So domestic content, energy, and energy community and low income community, all exactly the same, except for domestic content just had an adjustment for the percentages, which they were calling a correction from the Inflation Reduction Act to the OBBB. And so here are the percentages for qualifying for domestic content bonus of 10%. Basically, it ramping up, started 2027, 55% or better for your project or asset to qualify for domestic content. Under the OBBB, there are a few things you need to know, and there is an executive order that is working on definition of the FIAC rules, and you can look up the FIAC rules and you get a lot of different opinions right now on how it's going to work. Technically, for the material assistance, they just said use the domestic content percentage for now until we figure it out. What I want you to take away from this slide, if you see, like PFE or SFE or FI, what does all this mean, right? We have prohibited foreign entities and specified foreign entities, foreign influence entities. There's going to be more guidance under the FIAC rules. They're a little bit complicated, but on a go-forward basis, starting after 2025, the foreign entity of concern will be an issue. They're going to have kind of like 3 levels. One is the entity ownership. The other one is the project or product. And then the third one is the asset or contracts around it. So That there's more to come on this, and there'll be the cost ratio and penalties as well. So this is to know about and to keep an eye on. So any in the future, you're gonna have to know about it, but it's a little bit of a placeholder until we get all the facts out. So 45X, this is the advanced manufacturing production credit. Wind was eliminated. So if your clients are making components for solar, inverters, batteries, critical minerals and materials, wind components were eliminated, and they add metallurgical coal, which is, for making, iron and steel here domestically. So they added that as a category. So if you have, a manufacturing client, you want to look out for these assets. I did add another slide in here just because the CHIPS Act was like so important for the semiconductor. So this is for, a lot of people don't have clients that make semiconductors. They're very sophisticated clients. If you do, they qualify. However, it's also if you're making the manufacturing equipment that goes into making the chips. So it was just such a big part of what happened in recent history with the tax changes, and also politically, like, hey, we're going to keep chips or not keep chips. And we did. And after 2026, it goes to 35% of property placed in service. So if any of your clients talk about semiconductor, still good to go on that front.